Hello, everyone. My name is Dr. Uchenna Cole James, pharmacist and stock options trader. Thank you for joining me today. In this video, I'm going to show you how I made $5,000 last month from 5 trades in 20 minutes. So how did I do this? By trading credit spreads, more specifically, bull put spreads. It took me 15 minutes to enter these 5 trades from my money-making watch list and 5 minutes to automatically set my limit order to get me out of these trades. I'm going to show you why I chose these 5 equity positions, where I place these trades on a chart, and how to automatically set my order to get me out at an 80% gain. Let's go. So the market has been super, super bullish. Any bullish strategy the past year, you probably would have had a high win to loss percent ratio. So I've been trading a lot of long calls. I usually like my long call win to loss ratio. It's usually around 60%. So if I do 10 long calls a month, I win about 6 of them, lose around 4 of them. I like my risk to reward to be 1,000 that I can risk or lose to make $2,000 on the trade. So if I have 6 successful trades, that's about $12,000. I usually will lose about 4,000, having 4 unsuccessful trades for overall profit of $8,000 for the month for those 10 long calls. However, after January, my long call win to loss ratio began to decline, and the market was moving sideways a lot of the time. Your timing for your long calls have to be impeccable. You literally have zero margin for error. You need the stock to move up, and you need it to do it quickly. So I thought, how do I maintain a high win to loss ratio, but increase the probabilities of my trades winning? I do this by credit spreads, more specifically, bull put spreads. So what is a bull put spread? A bull put spread is a bullish strategy. Let me share my screen. So a bull put spread is a bullish strategy where you're buying out of the money put and you're selling out of the money put at the same expiration, and you're doing this under levels of support. You make money based upon time, okay? And I'm going to be using a lot of lingo interchangeably. Like, you may not be able to understand me if you've never traded stock options. However, if you enter your name and email, you can go ahead and download the option terminology sheet, and then you can follow me that way or just have it for your references, okay? So you want to remember, when you're trading bull put spreads, 3 S's, okay? Support, sell a 30 delta, and set your limit order. Support. Support is basically a level that investors do not want the stock to trade below, okay? So for an example, here is my chart on my paper trading account on a Thinkorswim, which is TD Ameritrade's brokerage or trading platform. So I love Thinkorswim. It's the robust, it's like the Lamborghinis of trading platforms. I look at my Robinhood account just to kind of manage to see how my money's flowing, but I never use the information from Robinhood alone. I trade solely off of information so I can maximize my gains. I need information from a chart. Okay, and that's what you get with Thinkorswim. So here's an example of Netflix. Okay, this is the way a chart looks like. This is a 6-month, 1-day chart. And what I wanted to do is show you how to identify areas of support. So that's it. So you can place your bull put spreads underneath these levels. Okay, so if you look at Netflix here, after earnings, it dropped down quite significantly. However, it maintained this price level at around $500. Also, price levels of where it bounced over in March, where it bounced kind of like in early March, and also even going back in January, it maintained these levels. So you want to place your bull put under what these levels are called, under support. Okay, because the goal for you to win on your bull put spreads, the stock has to finish above your short strike. Okay, so let me show you what I mean. I would place a bull put spread, which I did, so I'll show you that. I bought the 485 put and I sold the 490 put today. Let me show you what I mean. So this is an example of an optioned chain. Okay, I bought the 485. So you buy at the ask on your options chain. You want to sell to get the 30 delta, and that is your second S. So support is your first S. Second S is sell the strike at a 30 delta. What does this mean? That means that it has your position has a 30% chance of not being successful at expiration, which means it has a 70% chance of being successful. And that's as good odds as you're going to get. If you want to increase your your risk or try and get more credit or more profit, you have to take on more risk to do that. So I like the odds of a 70%. So that's why I always sell a 30 delta. Okay, so I buy at the ask 485, I sell a 30 delta, which happens to be the 490. I love a $5 wide spread. So let me show you how you do that. You click, oops, let me minimize this. So you click the ask of the strike that you want to buy. It doesn't matter which one you do first. So this one I did I bought the 485 put, and I want to sell the 490. In order to have two order tickets, and this is just one leg, in order to have two, which is what a credit spread is, you hold the control button down and click on the bid price, and that's the sold price. Okay, every time you do a credit spread, you receive a credit. Okay, so I'm going to do, let's see, I usually do 10 contracts, but I've already done this one, so I'm just going to do 10 more so you can see. So I'm going to say that I'm going to enter this credit spread, and I'm going to sell 10 contracts. Whenever I sell something, I receive a premium. I receive money for selling something. In order for me to make money on this trade, what I sell has to be higher than when I buy it back. So I sell it, I receive money. When I buy it to close, I have to pay money. That money I pay to buy it has to be less than the premium that I received in order for me to make money on this trade. Okay, so I confirm, hit send. And then let's see, right now it's working. So it's still working for me right here. Okay. When it filled, it automatically will go to your filled orders. I already have a credit spread on Netflix for what I did earlier, but let's pick another equity. Okay. So let's do Google for an example. Oh, Google just had earnings. So the level of support at Google is actually going to be like right around here. If you see that, 2250. We would want to put a bull put spread underneath here, but because underneath here is so far from where it's trading at, which is like 2,400, we're not going to get paid on that. They're the market makers that make the prices of stocks. They're not that generous. Let's try another one. Okay, so we can identify levels of support. Here's one, the DIA. Okay, so I've already drew a level of support price on here at 337. If you see it bounced off of 337 on April 21st, April 22nd, April 23rd. So we would want to put a bull put underneath this level of support. So let's do that. So when we place our bull puts, we want to sell the 30 delta. What is the 30 delta? 334. Okay, so I'm going to click on the bid to sell at the 334. And then I usually like to do 5 wide. So I'll go to 329, hold the control button down, click on ask, get a 94-cent credit. I usually like to get $130 or $1.30 cent credit, because I know that when I do 10 contracts, I can make $1,000. Okay, so let's just go ahead and confirm and send this, see if we can get filled. Okay, so this is still waiting as well. Doesn't want to fill our order to give us 94 cents. It's saying right now the mark, which is at 92 cents. That's how much that they would like to give us for this trade. We can negotiate. I usually don't try. I try not to get greedy. So let's negotiate and see if we can put in what they're willing to get us. You hear that? That means our order was filled for actually 95 cents. Now let's go to our order ticket, filled order, DIA. We did one contract and got 95 cents credit. So the third S, set your limit order to 80% to automatically get you out. I cannot explain this enough, you guys. I want to stress this. So many traders sleep on this, and this is how I just make money literally in my sleep. Okay, so how do we do that? We take the credit that we received and we multiply that by 0.2. So what is that? 95 cents times 0.2 is 19 cents. So we right click the order, create an opposite order, and change that for a debit of 19 cents. And we want to change this day to GTC. So that means no matter what happens, if this credit spread reaches a price of 19 cents, our order is automatically going to get filled. Confirm and send. So if you see, it's in your working order tab right now. Okay. So if you look at the filled, we sold to open the credit spread and receive 95 cents. We want to close it at a debit so we can buy it back at 19 cents. The only way to make money on a credit spread is if the amount that you close it at is less than the premium that you receive. So if ever your premium that you received is greater, it's showing a greater than 95 cents, that's showing a loss on your trade. You always want your trade to show less than 95 cents. You're automatically making money. So now let me show you my 5 trades. Okay. So the first one, so this is my spreadsheet that I broke down of a bull put spread. You really need to journal your trades. Journaling your trades will help you to understand how much money you're making, how many trades are successful, what trades are not successful, what strategies are successful, which ones are not successful. Okay. So these are the 5 trades that all expired in April that I made $5,250 literally in 20 minutes. Okay. And I did this because I already were following these. All of these symbols are on my watch list. Okay. So check out my website, www.drkjtrades.com, if you're looking for a money-making watch list. The first bull put were the Qs. Okay. I bought the 295, sold the 300. It was a $5 spread expiring on April 16th. I entered it on March 12th. I received $1.15 credit. The maximum gain, because I did 10 contracts, was $11.50, which also means $1,150 because an option contract gives you the right to control 100 shares. Okay. The max loss was $38.50 or $3,850. I exited on April 1st, 20 days. I received 80%. The reason why it shows a minus is because, like I said, the premium that you received is what the credit for selling to open this spread. To close it, you need to buy it back. You want to buy it back at a cheaper price in order to make money. Okay. So I sold it open for $1.15, bought it back to close for 22 cents. This was 80% gain. Times that by 10 contracts, $9.30 from that trade. Okay. I did one on Square, bought the 190, sold the 195, $5 spread, same expiration, $1.32 credit. Maximum gain, 13.20, maximum loss, 36.80. When you do credit spreads, I usually like my reward to risk to be about 25%. Okay, that's pretty standard. If you want a higher percent, you're just going to take more risk. You're going to have to get closer to where the stock is trading at. Okay, and it may not be below support. And when my bull puts, I've been 100% on all of my bull puts since the past 5 months. I have not missed on a bull put spread because I tuck it under levels of support. I don't get greedy, trying to get more credit. I'm just looking for a 25% gain. Okay. So 25%, meaning a credit of $1.37 on a $5 spread. So the most I can gain is $1.37. The most you can lose on a $5 spread is basically the spread minus the credit. So the most I could lose is $3.63 per contract. Okay. So look at Facebook. I did one. I bought the 265, so the 270, $5 spread, $1.37 credit, 10 contracts. I got out on April 1st, 7 days, 85% gain. Google bull put, bought the one on 1995, sold the 2000, $5 spread, $1.35 credit. Got out on April 5th, I was in the trade for a total of 6 days. Lulu bull put, bought the 295, sold the 300, $5 spread, expiration 4/16, received $1.22, exited at 24 cents. I was in it for approximately 3 days. Let me show you what these look like on a chart. Okay, this was my cues. Okay, so this is where I would have identified support right around here because I got it on this trade on March 12th. So this is basically March 12th here. I wanted to tuck my credit spread underneath support. And this 300 strike was the 30 delta. You see what happened? It came down to the support, the level that investors do not want the stock to get below. It bounced off of that and came straight up. Okay. Next one. The Square trade. This is the level of support that I identified, and I have all of this on my watch list. So I look at these every single day. I don't need to take a long time looking at it because I glance at it. I saw the setup. I saw the bounce off of support. I automatically tucked my bull put underneath the support by selling the 195 strike, buying the 190, receiving credit every single day. I was making money on the trade based upon time. Okay. So what was the next one? Facebook. Okay, so this was the support that I identified. I sold the 270 strike, bought the 265 strike, $5 wide. As soon as it bounced, it started going up because I tucked my credit spread under support. I immediately started making money on the trade. Okay, so that's the Facebook. Google. This is kind of harder to see because Google's a $2,300 stock now, but support I identified at around 2050. So I sold the 2000, bought the 1995. It bounced, went straight up. I'm cashing out every single day. Okay. Next one was Lulu. This one I had to get a little bit tighter, but I identified areas of support at around, this was 305. I sold the 300, bought the 295. It bounced off of that support and kept going up. For these 5 positions, it literally took me about 4 to 5 minutes, maybe 3 to 5 minutes per position to actually enter the trade. I look, I draw my support, I see that it's bouncing, I enter the trade. I did that on 5 different occasions. I automatically set my limit order to get me out at 80% by doing the calculation, and it's just waiting every day to get filled. Every day I might look at the chart to see, did it go below my short strike? If it goes below my short strike, I'm getting it. Depending on how much time I have left, if I have over 2 weeks left of the trade, I'm going to stay in the trade. As long as it does not break like a significant price level, I'm going to stay in the trade because the time is in my favor. The probabilities are on my side. I did my work. I studied the chart. I drew my support level, and then I tucked my credit spread underneath at a 30 delta. So that's a 70% chance of my trade being successful. And once my trade filled, I automatically set my limit order to get me out at 80%. Support, sell the 30 delta, automatically set your limit order. Don't forget those 3 S's, okay? The market has been super bullish. Credit spreads, more specifically, the bull put spread is the way to make money right now. I've been 100% successful in the past 5 months. You guys, if you want to learn more about trading options, sign up for my Introduction to Stock Options training course. The next course begins on May 1st. So this is what I'm going to show you. And this is what you're going to learn. You're going to learn over 40 hours of options. You're going to get coached for over 40 hours. I'm going to teach you about options principles, how to set up a Thinkorswim account, how to apply for options access, because you have to do that. Basic options, rights and obligations. The Greeks of options, Delta is one of the Greeks. You'll learn that in my class. You'll have access to my money-making watch list, how to analyze a chart in detail. Look for areas of support and resistance. Resistance will be on the top side, support being the bottom side or the floor. When to trade, is this trend working in my favor? We also have some psychology behind trading, like what makes us want to enter trades, how to just manage the trades more appropriately, how to manage the risk in every trade, okay? And I'm also going to share with you my prescriptions for success that has allowed me to make well over $60,000 last year as a side hustle. If you want to join me, go ahead and click on the link below. Sign up for my Introduction to Stock Options Trading course. Design your financial future. Let's get paid. All right, I'll see you on the inside.